Good morning, everyone. This is our usual end of the week Saturday morning Dow clearing sessions for NexxtPro. We're on 7th of Feb 2026. It's a pretty bright, sunny day outside here. It's good to see. Before we begin, thank you for those who joined in last evening for the ETF long-term portfolio, multi-asset long-term portfolio building with ETF webinar that we conducted last evening. Thank you for your participation. The high quality recording of that session is getting uploaded, takes a little bit of time. You will get an access of that anytime soon, today itself. Do share feedbacks. I will reach out to you for some feedback and what all can we do going forward, probably in the next, after a couple of months. Now, coming back to our Saturday sessions, last Saturday, we could not conduct our Dow clearing session. That is primarily because of the fact that I was traveling. I was in Chennai and I took a small little, I was invited at IIT Madras Finance Club for a small little talk. And that's why we could not do that. So today what we'll do is we'll spend a little bit of extra time and in-depth analysis of all the sectors and the Indian markets. Now, disclaimer also is always an important factor. Before we begin, I want to make it absolutely clear that this session is being conducted strictly for educational and information purpose only. I will personally not take names of any stocks whatsoever or suggest or advise any trade. If you have any doubts, questions, conceptual, pertaining to any stock chart, you will ask me that chart and I will take a look at it and clear out your doubt. So we are not going to discuss from any trading point of view. And that's why any chart, securities, indicator strategies or market views discussed are shared only to aid learning. These are not recommendations to buy, sell, or hold any security. As on today, 7th of Feb 2026, I'm not a SEBI registered advisor, still waiting for a reply, and I'm not offering trading or investment advice of any kind. If you choose to take any trading or investing action based on the concepts discussed here, you do so entirely at your own risk and discretion. Trading and investing in the financial markets involves substantial risk. So you're solely responsible for your profit or loss. Please consult your certified financial advisor before making any investment decisions. By continuing with this session, you acknowledge that you understand and accept this disclaimer fully. Okay. I have the monthly on the left because we had a month close, weekly in the center, and daily on the right hand side. I am using our usual next price indicator on the Heikin-Ashi charts, which gives us our state of flow, and the next RSI indicator, which helps us with the different types of divergences. So simple template, nothing fancy. We will also talk about RRG graph using the strike analytics page a little later. But the first thing is we should cover what's happening with the Nifty. Nifty monthly at the close of Jan 2026 was a red HAGB, a long-legged red HAGB. Previous to that, the green bodies, the state of flow was supportive and encouraging. With last month's close, the state of flow has gone and it has gone to neutral. Bullish to neutral. Such neutral cases, such red HHGBs essentially gives us signs of consolidation, probably a continuation breakout or a further correction. Start of Feb has been with a lot of volatility thanks to the budget followed by the India-US trade deal. And so far with just few days in Feb, at early stage of the month, we already have a huge range and some bit of a red body. That's because of the budget day sell-off. And as of now, the state of flow is negative. Now, this state of flow can change as we trade through Feb. So we cannot completely accept this state of flow to be negative. And so we will, for a better clarity of the direction, we will focus more on the weekly and the daily charts. So what is the cue from the monthly? The monthly has gone neutral, choppy, and it's difficult. It's difficult because of the range expansion. The levels are way too far away on the top as well as at the bottom. So if we look at a Feb, which is essentially range bound and choppy, I think both of us should not be surprised. So monthly is not giving us a very strong directional clarity. It's giving us that, listen, a lot of range has happened and it can stay within the range. With that thought in mind, if we come to the weekly, the state of flow was negative very clearly. But last week, with the huge gap up and the slip, the state of flow again has gone neutral. In this case, negative to neutral. One thing is pretty clear from the weekly chart. That is this low, 24,600 about. A break of this low price will tell us very clearly that the huge 1,000-point gap up that you experience because of the US trade deal, market is looking at something different altogether. Market kinds of shrugs it off if the low gets broken. If. It's a big if. On the other hand, it has also touched almost close to an all-time high, close to that level, which was above, between that 26,300, 26,400. And yes, a break above this level will definitely bring in very strong positive momentum back to the market. Till that happens, it's going to be choppy, selective, and we have to deal with it. Coming to the daily chart. The daily, if I remove the Heikin-Ashi and go back to candlesticks, it is important this week because we had a huge gap up. The gap was more than 1,000 point. That day it slipped and closed to around 600, 650 points. After that, the 3 trading sessions has particularly been choppy and more of consolidation. It's trying its best to hold on to the gains. A 1,000-point gain had come right after a 600-point sell-off, thanks to the budget day, and especially the STT charges, increased charges. So the daily has improved and buying time. The weekly has gone super, range expanded and choppy, and so has the monthly. So we should be ideally open to either ways. As I said earlier, open to either ways is fine, but the level of either of the ways is way, way above. To reach a breakout point, I have to scale up 600 points. For a breakdown, I have to fall on the 800 points. So that's the kind of, we're stuck in the center. Few sectors are doing good, few sectors are not doing that great. So that selective trading nature continues. So how do we deal with this kind of a market? My suggestion will remain the same. Be extremely selective on either side, the long as well as the short. If you take trades from the daily chart or sub-daily chart, give a lot of importance to the weekly chart. A lot of importance to the weekly. Based on the weekly, then you should decide on the daily and the lower time frames. Because we had a huge gap up, because the market is trying to consolidate and hold on to the gap up, keep a bullish bias also, but not completely. There are sectors which are pretty weak. So, a little bit of extra homework is needed. This is not an easy market. It's not going to stay as an easy market. Couple of things. Fundamentally, or the macro point of view, India seems to be fairly well positioned. The liquidity is also there. The numbers are also there. Earnings are coming out one after the other, mixed. And we should see some upsides. In between, there can be knee-jerk reactions on the downside that we had. These knee-jerk reactions, I feel, my experience suggests me, will come primarily from outside the country. And which is very, very obvious, the global geopolitical tensions and war here and there, crude, and that kind of scenario probably will prevail. Within that, we have to just trade through and invest. That's the motto. We go by price completely. And keeping that in mind, short-term positivity is back. Intermediate and long-term choppiness is there, which means, bottom line, any trade that I'm planning to take the next week on the long side as well as on short side, I will keep it hit and run, quick, and not sit on it for long. Fine. Small cap and mid cap, And in fact, before I go to small cap and mid cap, I would like to quickly cover the USD INR, few commodities, and then we will go to the sectors with RRG. Now, dollar and rupee. So we have the USD INR, and the INR finally, after a lot of depreciation, has kind of picked it up. This is the USD INR, so dollar has fallen in terms of INR. It's kind of stabilizing close to that 90 and a half level, which is okay because you were above 92. And going by the chart, I have a negative divergence shaping up on the weekly time frame. And these things do not create a huge range all of a sudden, provided there's some extreme cases. These are extreme cases. I expect it to probably consolidate in this area. We'll see. But that run up above 90, 90.25, 90 and a half, 90.7. So that thing is behind us. So it should not give us that much pressure. We'll see if the FIIs continues to sell, it will have a vicious cycle, and their selling will only lead to the demand of dollar and the depreciation of rupee. So that FII selling will be an important factor also for the dollar. Commodities have, so silver, gold, and all of them, I don't know, means we did talk about this last week multiple times of extreme emotions that were shown, and that's exactly what prices are doing right now, the range expansion. I am not a big fan of trading commodities. I have always suggested that invest in commodities in your overall portfolio, which you can have a multi-asset portfolio, maybe a 10% or a little more, because earlier there was only gold. Now you have gold, silver also. Anything between 10 to 20% exposure you can have, and you should have in commodities. I'm not a big fan of trading the commodities. If you want to trade gold, makes sense. But overall, after this huge move, they are coming down. There will be volatility. There will be choppiness. So if you are a commodity trader, trade carefully, trade cautiously. Two charts that looks interesting is crude and natural gas. Natural gas had literally a 90-degree move, which has improved the weekly chart substantially. Any kind of short-term correction on the daily chart can try and push the chart up. So natural gas has been an underperformer for a very, very long time, right? And now it's showing us a huge vertical move and keep a bullish bias. Crude, the US-Iran thing, and can create a bit of a short-term move on the upside, which we are seeing for the last 4 weeks. State of flow has gone up. And so any kind of a pullback can be opportunities on the long side. Anything you do in the commodities, I would suggest if you're a trader, keep it very, very short term and stick to your risk management rules. That's your stop loss. Okay, now back to the equity market sectors. Strike Analytics for RRG, NSE sectors, all the 16 names, Nifty 500 as a benchmark. We'll go to the weekly time frame. And on the weekly time frame, do we go back to the charts and find any important count? If we can, I can see something really interesting. What I can see really very interesting, which will give us a pretty longish count. You see, the market kind of bottomed out here, gave a zigzag move back to an all-time high. It took quite some time. Sharp sell-off back to where it was. And then all of a sudden, a sharp recovery and has created a huge range. So this, can I figure out what's the length of this? If I count from here all the way to the current bar, it's around 26 weeks. So half of the year, this is a weekly chart. And you're more or less within this. You came back to the level, all of a sudden shot up. So 26, let's see if we see anything interesting if we keep a count of 26. Generally, we keep a count of around 12, 13. That's around a quarter. And 26 will give us a longish tail. That's it. Let's see. Over the last 26 weeks, when the market has been, choppy upward, sharp sell-off, and more or less it's a huge range. Let's see what's the size of the range. So on the upside, it's around 26, 300, 400. And on the downside, it's around 24,400. So 24,400, 26,400. So you have a 2K, you have a 2,000 point range. Within this 2,000 point range, now let's take a look at the sectors and figure out what's happening where. A lot of long tails because we are using 26 weeks. So in this entire 26 weeks period, if I sort the percentage change, I see metal, of course, big, huge outperformer, and then you have the PSU Bank. These are the two which had held out, metal and PSU Bank, 26% and 27%. Then we have the 9%, 8%. Over here, we have the auto also. Underperformer, big time. Media, anyways, you know me. Media is something I'm not a big fan of. But then, consumer durables, FMCG, reality. These are the pain points. So, chaliye, let's start with the leading quadrant. Nifty Metal. Nifty Metal was a big outperformer. Momentum slowdown, immediate U-turn, and what a move it gave metal stocks as well as metals per se. Current situation, current reading, exceptional. Very good. I have said this and I will probably repeat this in every class of ours whenever we discuss RRG. Any RRG angling up left to right is a good RRG. So metal, positive view. With this, can we go to the chart and figure out what's the Nifty Metal Index doing? CNX Metal, we had kept a green flag. Monthly, state of flow positive. Weekly, state of flow positive, but the shadows have come out, which means it's not going to be easy. And the daily is kind of range bound and choppy. Daily does not have a state of flow. RRG positive, weekly positive, so I will keep a positive flag. I will just add an extra line that it's not going to be smooth like the way it was. With a sharp sell-off like this and the previous zigzag behavior, it is going to stay zigzag. You have to be very selective, but selectively bullish. Who was the next sector? Nifty Public Sector Enterprise. Nifty PAC, now it's showing a beautiful angle. Again, left to right. It picked up a bit of momentum, lost a bit, picked up again, and now it's en route to the leading. It has just entered the leading quadrant. Not bad. Public sector enterprise is your mixed bag. If I take a look at the monthly as of now, with this monthly, we cannot take a call because it's just 7th of Feb. So a lot of days are left. But the weekly has turned positive. Good thing. Daily is also holding well. Good thing. Any kind of a short-term correction should be opportunities. So PAC, we will continue positive bias. Clean. Both the first two sectors which we discussed are clean. Now we enter the important pockets. Bank Nifty, private bank, financial services, and IT. This is where I think easily 55% weightage. More than half of the market are these sectors. Bank Nifty, leading quadrant, was losing momentum, is losing momentum. Relative strength kind of is there. I mean, these kind of RRG has the potential to go like this. It has the potential. It can do anything. To be honest, it can do anything. All depends on price. But because you have the relative strength, because you're slowing down, all that you have to do is pick up the momentum. Will it pick up the momentum or not? Private bank, same story. Financial service, also same story, but private banks have better relative strength. Private banks' relative strength is better than financials. And okay, PSU Bank ko bhi jod lete. Let's just add on PSU Bank because we are discussing the banking. Now, PSU Bank has huge relative strength. See where it is compared to this level. Huge relative strength. But it has lost the momentum. It is losing. And that's why from leading, it has come down to weakening. RRG study is about relative strength and whether the relative strength is shifting or not. This kind of RRG tells us it has a lot of relative strength and the momentum of it is losing. For a layman, what does this mean? You keep a bullish bias, there's a strong sector, and look for revivals. So we can expect revival in the private banks and the PSU banks. PSU banks have better relative strength. It can be a change of hands also. The private banks can take it up from the PSU banks. That can happen because everything depends on price. Financials, non-banking financials are still okay, not that bad. And let's quickly add IT, and then we will go to the charts. IT has done really well. Means I'm very impressed the way it had done, but with the recent AI Anthropic update and the sell-off across all major IT companies worldwide, not just India, things will become really difficult. The range will expand. For a trader who trades based on price, if the range expands, it becomes difficult. With that in mind, let's start with Bank Nifty. Bank Nifty monthly, okay. Bank Nifty weekly, last week it was state of flow was negative. I had kept a red flag. This week, a lot happened. You can see the size of the range. And that's why it has turned neutral. I'm going to go neutral. I do not have that clarity. See, weekly price-wise neutral, relative strength is there. Monthly relative strength is also there. Ideally, it should go green. But I want to take some time off for what? For this range to contract. This range should contract and then I should get a move. So I'm going to stay on the sidelines and be very selective. Private banks, same logic. PSU banks, we were neutral last week and this week it has turned slightly negative. Price has turned negative. RRG momentum is slowing down. Monthly is a super looking chart, no problem there. This is very, very selective bullish, selective bearish. Few selected stocks can come down. I'm going to stay neutral as of now in this entire pack. Why neutral? When price is coming off or slowing down? Because of the volatility. The main reason this weekend we are discussing, I would love to go neutral on many sectors because I will give the market some time to slow down and contract the range. That's the main reason. Finance, and same story. See, all these charts, you take a look at CNX Finance. It's all a typical breakout candidate. Relative strength is there. It can pick up. So even if you are looking out for trades, look primarily on the long side. Look out trades primarily on the long side. So selectively bullish is the call. Now let's take a look at IT. And it's not good actually because of the range. It did give us a fantastic breakout on the daily chart and huge surprise on the downside. State of flow is negative. Relative strength is there. I should not mark it red. I should keep it as it is. Please understand. Banks, Bank Nifty, private, PSU and finance. Its range has expanded and our view is selectively bullish. IT, selectively bearish because of the state of flow. All right. But I'm going to go neutral because I want to see proper confirmation of weakness, especially from relative strength. It wasn't easy. Now let's come to weakening. PSU Bank we have covered. Auto and Midcap 100. Auto has been an outperformer, loses momentum, and is now losing relative strength. It's going right to left. Not very good. Again, does it have relative strength? Yes, it has relative strength. But what relative strength it had, it's giving back. That's the situation. Can it go to lagging? It can go to lagging. Can it bounce back to leading? Yes, anything can happen. With that in mind, can we take a look at CNX Auto? State of flow negative, huge bounce back. You can see the size of the bounce back. State of flow goes neutral. We have a bit of weakness from the RRG. Weakness and then bounce back from the daily. Again, same thing. This week is going to be a week of neutral flags. So this is selectively bullish or selectively bearish? I will say selectively bearish because of RRG losing grounds, because the state of flow was negative. So when you're transiting from a state of flow red to green, let's say a downtrend to an uptrend or an uptrend to a downtrend, our state of flow will always go neutral first. It will never go green to red or red to green. It will always give a room to breathe. And now it's giving that room to breathe. After this breathing, will it continue or will it bounce up? Considering relative strength, which is losing, this is selectively bearish. Clear? But I'm not giving the red flag. Mid cap. Mid cap is dull, to be honest. Very little relative strength, was picking up, now giving back. So nothing strong from RRG. CNX mid cap, I think the same story. The red flag needs to go. Huge range. Let's see what happens. Selectively bearish. Small cap, bearish. Small cap, even after last week's move, we don't have a neutral state of flow. Monthly is not looking good at all. Monthly is also negative state of flow. So small cap, clearly bearish. Mid cap, neutral. Lagging quadrant. Pharma, consumer durables, FMCG, and realty. You can see realty has been in this lagging quadrant. Of late, it did try to pick up, but then it's fallen back and picking up. So realty not good. Picking up a bit of momentum. FMCG, definitely not good. Consumer durables, picking up a bit of momentum there. And pharma, all over the place, very close to that 0 point and losing some grounds. None of them are really that great. Some Q, we have to pick it up from the price. So can we try? Starting with FMCG, we have been red flagged. We had red flagged FMCG for months now, and we continue. No problem there. Consumer durables, yes, we had a bounce back. Our weekly state of flow is still negative. Our monthly is also negative. Red flag, no problem there. Very clean. Pharma, we should also maintain a red flag here, though the range has expanded. Clearly red flag. And the other one was realty. Yeah, this is fine. I think neither of these four sectors we had any problem with price. Price clearly gave us a red flag across weekly, daily, a bounce back. These kinds of bounce back probably find resistances, will find. So these are your sectors where you can look out for short trades if you're into derivatives. This was relatively easy to handle. Now the last quadrant, improving quadrant. Energy, up and down, it's going round and round. Currently, it is over here. It is angling like this. Any RRG angling like this is a good RRG. So RRG-wise, improving, yes. Small cap, improving, has just gone up, but price was not there at all. So small cap, I'm not making any changes. And media, can you see the amount of momentum improvement? It has the least relative strength. So media, small cap, and energy. Energy had a very, very impressive close last week. The close was at the highest point of the day's range on Friday as well as week's range. And this PSC, public sector enterprise, which can be energy, which can be defense, which can be various other sectors, this is where it is gaining some traction. Now, we have a breakout. We have a breakout situation on the monthly chart, which is encouraging. Energy is in the improving quadrant. Energy, after last week close, we don't have a state of flow, but high chance, very, very high chance with a close like this, next week it will go to a positive state of flow. So I will take the red flag off. I will wait for the green flag, let it consolidate a little bit. Next to next week, we should be looking at bullish trades from CNX Energy. Not bad. Media was red. It should stay red. Relative strength is improving. Now, this is a very interesting chart. I'm not interested, but the chart is interesting. We have a positive divergence kicking in, followed by an HAGB, back-to-back two HAGBs. Monthly chart is anyways down and it's back to those lows. So a double bottomish looks like a double bottomish. It needs this leg. It needs this bounce back. Relative strength's momentum is improving. So for a contrarian trader, who wants to buy only stocks and sectors which are deeply oversold and deeply corrected, these kind of combinations are very good. We are not in that game. We are focused more on pullbacks, but media is offering that. Small cap and energy. Small cap and energy, both of them we have covered. Small cap, we are keeping a red profile. Apart from that, we have capital markets. Goes neutral. Chemicals. Relatively less data. I have to stay negative here. Defense. This is a struggler. It is struggling. Last week's back-to-back two green bodies has helped us to give us a green state of flow. I don't have a RRG here. It is selectively bullish. It is not very strongly bullish, but I would like to give it a green flag. I would like to see whether this daily oversold turns around or not. If it doesn't turn around the way few stocks has corrected, if it continues, then we will lose this state of flow. Digital will get impacted because of IT. So red stays, and tourism, yeah, red stays. So the key sectors of banks, selectively bullish. They are in a transit phase. IT, selectively bearish because of the sharp sell-off. Any bounce back can be sold into. Clear negatives where your FMCG, consumer durables, realty, pharma, chemicals, tourism, digital, these are clean. Defense is struggling and volatile, selectively bullish. Rest of them like auto and others, energy can be very interesting, but after a week are neutral. Which tells me that, which takes me back to what I was saying earlier, that we are back to a market, or we are in a market wherein we have to be very, very selective and cautious and careful. Short-term quick trades, hit and run, get out, look into the next trade and move on like this. We do not have very strong clarity. Market is in a very reactive mode. I don't know what it will react to next. It did react to budget negatively. It did react to the US trade deal positively. How will it react to any kind of war that is looming in front of us, or anything can happen? Will it react to the global markets the way Dow Jones hit an all-time high all of a sudden last evening, and S&P 500 coming out of this rising wedge? I don't know. We will see. But we have to be selective. We have to keep on doing our homework, and we want a stable market. We've been struggling with a choppy market, but because we want a stable market, the market is not going to give us that. We have to sail through this. These are rough waters. We just have to sail through it. And in rough times, or even in good and bad times, the best North Star, the best guide, not me, the best guide is price. So stick to price and price only. Okay, so that's the end of the week. Slightly detailed analysis on the markets and sectors. Now I will take a look at your doubts and questions.